Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you trade stocks, crypto, forex, gold, or indices and want clear buy and sell signals, you can check out VIP indicators through my link below. Grow $100 to $10 with VIP indicators.
Right.
VIP Indicators offers TradingView indicators, market alerts, trading education, and chart reading support with up to a 93% win rate.
Which is really helpful to have in your corner.
Exactly. The tools are designed to help traders spot possible setups faster and trade with more confidence. But please remember, trading is risky.
Always.
No indicator can guarantee profits, and growing $100 into $10K is not guaranteed. Use these tools for education and analysis only, manage your risk carefully, do your own research, and never trade money you cannot afford to lose.
Yeah, definitely do your own research.
This is an affiliate link, so I may earn a commission if you use it at no extra cost to you.
Okay, so getting right into it. Why is Wall Street obsessing over a pre-revenue company that currently makes $0?
It is a massive paradox, honestly.
I mean, they burn tens of millions a quarter, and they plan to run their entire business on, like, atomic waste. That is the central mystery we are untangling today for you.
Yeah, because, we spend all this time marveling at what artificial intelligence can do on the software side.
Oh, for sure. Like writing code or folding proteins, generating those crazy immersive worlds.
Right, but the physical reality is that AI data centers are just devouring electricity, like at a scale the current grid simply cannot support.
All right, let's move into the wealth building context here. Because when we look at the macro environment, major tech companies are, well, they're scrambling.
Oh, absolutely. Energy is, it's basically the defining physical constraint of the digital age right now.
Yeah.
You can design the most sophisticated microchips on the planet, but without the gigawatts of uninterrupted power required to run them.
They're just very expensive paperweights.
Exactly. The tech sector is hitting a massive wall, and Oklo is positioning itself directly in the center of that void.
Because wind and solar simply do not provide the base load, 247 reliability required for that kind of compute. They really need nuclear.
They do, but traditional nuclear takes, what, a decade to build? And costs $10 to $20 billion per plant?
Yeah, it's incredibly slow.
Right. So Oklo is attempting to completely invert that model. They're replacing the legacy utility framework with a power-as-a-service model.
Which is super interesting. So instead of asking a client to finance a massive bespoke construction project, Oklo just designs smaller, modular, fast-fission reactors.
Yep, they're Aurora powerhouse.
Yep.
Oklo fronts the capital, they own the reactor, they operate it, and they just sell the reliable electrons to the end user.
So for a client like a major cloud provider, it removes all that immense friction of nuclear regulatory compliance.
Exactly. It shifts the burden entirely onto Oklo. It is a highly attractive proposition for tech companies that want clean power without, actually becoming utility operators themselves.
Now let's look at the fundamentals. To run a power-as-a-service model for nuclear infrastructure, you need an incomprehensible amount of capital on hand before you ever sell a single watt of electricity.
You really do. And Oklo has built what can only be described as a financial fortress.
It's massive. They closed the first quarter of 2026 with $2.54 billion in liquidity.
Yeah, which breaks down to $1.59 billion in cash, plus short and long-term marketable debt securities.
And their current ratio sits at an astonishing 49.08.
Right, and a current ratio of 49 is almost unheard of in traditional equities, but it is an absolute necessity here.
Because they own and operate these plants, so they are responsible for all the upfront capital expenditures.
Exactly. They are absorbing a net loss of $33.1 million in Q1, which translates to 19 cents per share, with operating costs running around $51.5 million.
Though those operating costs actually declined roughly 10% sequentially.
True, but the burn rate is still significant. That $2.54 billion liquidity pool ensures zero near-term solvency risk while they navigate the multi-year runway toward commercialization.
And they didn't just stumble into that cash pile either. They netted $1.18 billion in Q1 through an at-the-market equity offering.
It's aggressive capital raising. But when your stock is trading at a premium valuation, leveraging that equity to secure your balance sheet is just a highly strategic move.
Yeah, a total financial bunker.
Yeah.
But let's pivot to the technology, because the financial engineering is really only half the story here.
Oh, absolutely. The core of their fundamental value is the Aurora powerhouse and its fast neutron fission design, specifically its ability to recycle spent nuclear fuel.
Okay, so how does that practically work?
Well, the physics here diverge significantly from the traditional thermal reactors that make up the current U.S. nuclear fleet.
Right.
Thermal reactors use moderators, like water, to slow down neutrons so they can split uranium-235. Fast neutron reactors do not slow the neutrons down.
Wow, okay.
These high-energy neutrons are capable of fissioning the transuranic elements found in spent nuclear fuel, basically what the public typically calls nuclear waste.
Wait, they are basically turning nuclear waste into clean energy. It sounds like running a car on its own exhaust.
That's a great way to look at it. It is a profound shift in the economics of energy. Fast fission technology extracts vastly more energy from the original uranium ore and simultaneously reduces the half-life and volume of the remaining waste profile.
So from a fundamental business perspective, Oklo is securing a vital fuel supply while offering a solution to one of the industry's largest public relations liabilities.
Exactly. And that explains why the U.S. government is so interested. Oklo already secured the Nuclear Regulatory Commission's approval for the Aurora powerhouse principal design criteria.
Which is a massive barrier to entry for competitors.
Huge. It doesn't mean they can just start pouring concrete tomorrow. They still need site-specific approvals, but it validates the foundational safety architecture of their design.
It places them years ahead of peers who are still trying to explain their underlying physics to the NRC.
Yeah, and furthermore, their strategic partnership project with the Idaho National Laboratory under the Department of Energy's reactor pilot program anchors them within the national security infrastructure.
Right, they are applying AI-driven workflows to a plutonium-fueled reactor design they call Pluto.
Exactly. When you partner with the DOE and Tier 1 tech giants like Nvidia to accelerate advanced materials science, you create an immense structural moat.
That brings us to the catalyst timeline. We have the blueprints, the cash, and the regulatory head start. But commercial launch for the Aurora powerhouse isn't targeted until 2028.
Yeah, and for a pre-revenue company, an 18 to 36-month waiting period can be brutal on the stock price.
Seriously. But there is a major revenue catalyst approaching much sooner. Let's talk about the Atomic Alchemy division.
This is such a critical transition point for their income statement. Atomic Alchemy recently secured licensing authorization to produce and sell radioisotopes.
Because of the specific physics of Oklo's fast neutron fuel cycle, right?
Yeah.
They can extract highly valuable alpha-emitting isotopes as a byproduct.
Yes, exactly. And historically, those have incredibly fragile supply chains. They mostly rely on a handful of aging government research reactors around the world.
And these isotopes are vital for industrial radiography and, more importantly, targeted alpha therapy in oncology.
Right, advanced cancer treatments. The first isotope client is already in progress, with commercialization expected in Q2 or Q3 of 2026.
So while they wait to plug in the giant Aurora powerhouses in 2028, they're going to start selling isotopes on the side. Is this just a side hustle or a real revenue stream?
Oh, it's a real revenue stream. It's a high-margin business line that fundamentally shifts Oklo from a speculative development project into an active revenue-generating commercial entity.
And bridging that gap to 2028 brings into focus their massive 14-gigawatt commercial pipeline.
Yeah, to visualize that, 14 gigawatts is enough power to light up roughly 10 million homes.
That's incredible, and it is anchored by a massive prepayment from Meta to secure up to 1.2 gigawatts of capacity in Ohio.
Right. Meta is aggressively scaling its AI infrastructure, and prepaying for capacity confirms that hyperscalers view Oklo's power-as-a-service model as a truly viable solution to their energy deficit.
July 4, 2026 serves as the ultimate near-term catalyst here. Oklo is racing to achieve criticality at the Aurora INL and Groves isotope projects by that date.
Criticality meaning the reactor achieves a self-sustaining fission chain reaction.
Yeah, reaching that milestone takes the fast neutron recycling technology out of the realm of computer models and proves it in a real-world operational environment.
Exactly. It is a massive de-risking event that Wall Street is watching very closely.
Now let's pivot to the chart, because the price action here has been incredibly violent. In Q1 of 2026, shares plunged 31%.
Ouch.
Only to surge 46.2% in April, completely erasing the earlier losses. The stock is currently trading around 73.63.
Right, which is up about 8% over the past week, but it is still sitting about 60% below its all-time high from last October.
That volatility is just a textbook example of momentum trading around AI-adjacent infrastructure. Oklo does not trade like a boring utility stock.
No, it trades with the beta of an AI high flyer. Going into the Q1 earnings call, the options market had priced in a massive 11% swing.
And the stock had already rallied 50% on speculation, right?
Exactly. So when the earnings numbers landed exactly in line with expectations, it triggered an aggressive sell the news event. Traders who rode the momentum wave simply took their profits and exited.
So what does market sentiment look like? If we look past the retail momentum traders and examine institutional flow, the conviction remains heavily skewed to the upside.
It really does. Wall Street targets are highly aggressive right now. Wedbush has a price target of 110. Cantor Fitzgerald sits at 122.
Bank of America recently raised their target to a 127.
And Tigris Financial is at the top of the street with 130. Those targets imply a near doubling of the current valuation.
However, it requires a balanced view. JP Morgan initiated coverage recently with a much more conservative target of 83.
Yeah, but even then, their analysts explicitly noted that Oklo's federal backing, the DOE partnerships, and the massive backlog give it a distinct advantage in a highly complex industry.
So the institutional sentiment essentially boils down to whether investors have the patience to weather the cash burn until the commercial rollout.
Precisely.
Now let's talk about the risks. Because if the consensus is so high and the tech is so revolutionary, why did it tank 60% in the first place? What are investors afraid of?
The most glaring execution risk to that 2028 timeline is securing the actual fuel they need to run these advanced reactors. High-assay, low-enriched uranium, or ALEU.
Right. ALEU is basically the bottleneck for the entire next-generation nuclear industry.
It is. Traditional commercial reactors use uranium enriched to about 5%. Oklo's smaller, advanced designs require uranium enriched to between 5 and 20%.
And this higher density is what allows the reactor core to be so compact, right?
Yes. The geopolitical problem is that historically the only commercial-scale supplier of ALEU in the world was Russia's state-owned nuclear corporation.
Which is obviously no longer a viable supply chain for U.S. national infrastructure.
Not at all. The domestic HALEU supply chain is currently in its infancy. The Department of Energy is injecting billions to spin up domestic enrichment capabilities.
But if those facilities face delays, Oklo's 2028 launch date is completely compromised, regardless of how good their reactor design is.
Exactly. Furthermore, any delay exacerbates their dilution risk. We discussed the $1.18 billion ATM offering that bolstered their liquidity. The cost of building that financial bunker is shareholder dilution.
Yeah, in Q1, outstanding shares jumped from 160.5 million to 173.9 million. And Oklo recently launched another $1 billion at-the-market equity program.
Right. If they encounter regulatory friction or fuel supply issues, they will be forced to tap into that new ATM program, basically slicing the equity pie into even thinner pieces to fund their ongoing operations.
That's like a race against a ticking clock. They have a massive tank of gas with that $2.5 billion. But if they hit regulatory traffic jams before 2028, they'll have to keep going back to investors for toll money, watering down everyone's shares.
That is exactly the fear. Any slip in the timeline could severely damage their premium valuation. Even with the principal design criteria approved, they still have to navigate local zoning laws, environmental impact studies,
and site-specific NRC licensing, which are notoriously slow processes.
Oh, incredibly slow.
So with everything on the table, what's the final verdict?
The overarching investment view yields an 8 out of 10 bullish score. However, this is strictly a multi-year hold. We're specifically targeting an 18 to 36-month horizon to capture that 2028 commercial launch.
Right. The thesis being that the broader market is underestimating the economic power of transitioning from a pre-revenue developer to a foundational energy provider for the AI boom.
Exactly. If they achieve criticality in 2026 and commercialize the Atomic Alchemy division, the path to unlocking that 14-gigawatt pipeline becomes highly tangible.
It's just wild to think about. We constantly worry about the environmental cost of AI's energy hunger. But if Oklo successfully powers the AI revolution using recycled nuclear waste, it doesn't just solve a tech bottleneck.
No, it forces us to completely redefine our concept of what waste actually is.
Yeah. And if you want extra help reading trading charts, you can check out VIP indicators through the link below. The campaign is Grow $100 to $10K with VIP indicators, and their tools include TradingView indicators, market alerts, and trading education with up to a 93% win rate.
But trading always carries risk, right?
Absolutely, and no profits are guaranteed. Use the tools for education and analysis, manage your risk carefully, and always do your own research before making any trade. This is an affiliate link, and I may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.